Hi, this is Walter Montero, and you're listening to this week's edition of the Real Estate and Mortgage
Hey
Show.
guys, welcome to today's episode of the Real Estate and Mortgage Show. Today we're going to talk a little bit about reverse mortgages and what they are. Reverse mortgage is typically a mortgage that is taken out on a property, usually by somebody in the autumn years of their life, 55 years old and older, where they can take out this mortgage and not have to support it with any payments. It's usually a great way for seniors to sort of get access to the equity in their home without having to sell it. So it can be a useful tool. It's certainly not for everybody, but it can certainly be for a few people. And what we found in our experience is that the two institutions that do it are Home Equity Bank and Equitable Bank. So they typically go to 55% of the value of the property, and you don't have to support this property with any payments. So basically what happens is the interest and the interest plus the amount you borrowed becomes due and payable typically within a 5-year period. So your interest, or the tab, I guess, gets paid at the end. What we've found is for these mortgages to be feasible, they usually have to be taken out by somebody that is a little bit older. I find personally to be able to access any kind of equity worth its salt, you have to go at least 70 to 75 years old. And you don't have to support it with any payments. And obviously, it's a great way to supplement your retirement. Some people will actually argue and say they don't like the reverse mortgage. And I certainly understand that. They are not for everybody. But, you know, when resources are limited and you have to access your equity in your property and you don't want to sell it, this is certainly a way to do it. The other thing, of course, is when you have an RSP and you start drawing on your RSP, obviously you have to convert it into a RIF. You have to start paying tax on that money. When you borrow a reverse mortgage, obviously this is borrowed money. This is your own equity, so you don't have to pay any tax on it. So just keep that in mind. It's not for everybody. It's certainly something that warrants sitting down and having a consultation with a mortgage professional such as Karen and to see if a reverse mortgage is right for you. I know one of the biggest things that people are concerned about is what happens if the property ends up being worth less than the mortgage that is actually owed. And we have been assured by the lenders that they will actually absorb the cost of that loss. But keep in mind that that is very, very rare. In fact, you know, when they're only lending to a maximum of 55%, keep in mind that your property over the time that you occupy it also continues to go up. So the instances in that happening, the chances of it happening are very, very slim. Anyway, just a little bit to know about again in what's available in the mortgage market. And if you think that you are a candidate for a reverse mortgage, or you have a friend or family member that might be, by all means, feel free to reach out to us anytime.
Thanks again for listening to this week's episode of the Real Estate and Mortgage Show. If you have any real estate questions, please direct them to me at 519-624-9222 or walter@maximumresults.ca, or you can find me online at www.cambridgehouses.com. If your interests are in mortgages, please feel free to call 519-624-9222 or email Karen at karen@maximumresults.ca, or you can find her online at www.m as in Mary, R as in Roger, financial.ca. Thanks again for listening, and I hope you have a great week.